Let's start on that note. I mentioned hot money flows into the country. We're talking about emerging market currencies coming under pressure. Evidence in the local currency, we are under pressure, but we are doing better than our peers.
Well, I think if you're looking at hot money flows, or certainly any form of international investor flow, the best indicator of that right now is the bond market. And I mean, the bonds are trading currently in the 5-year space closer to that 650 mark, which, is significantly stronger than what we've seen historically. And certainly through this crisis, it has been something that we've seen offloading of equities recently on the back of the concerns around the global growth picture and a rally into the bond markets globally. So you've seen the US Treasuries doing relatively well, but the South African market has been interesting from the perspective that we've seen a significant amount of foreign inflows, and they haven't left our shores. So as much as the rand's slightly weaker than potentially the levels that we were seeing earlier this year, ultimately we're not seeing a blowout in the rand because we're not seeing this money leave our shores as aggressively as I think a lot of people had expected.
Let's touch on the Fed's annual meeting. Of course, I'm alluding to the meeting at Jackson Hole. How significant is this? It seems that investors are, of course, pointing to the fact that at this meeting last year, we saw quantitative easing 2 announced. Could we see something dramatic to this extent this time around?
Well, I think, Eleni, what's happening at the moment is there's a lot of uncertainty in the market. I mean, you've had this entire, uncertainty around the downgrade of the US itself, as well as the peripheral issues that just won't go away in Europe. I mean, you're looking again today saying, should Greece really be let go? Should they be allowed to default? Are the weakened countries, better off in an environment where they have a free-floating currency to sort of shield them against all of the headwinds that they faced as part of the Eurozone? So there's a lot of that debate that's going on under the table. And then obviously we've got Wyoming, which from a quantitative easing perspective really equates to the fact that there's this global growth slowdown. The concern is that the equity markets are getting carried out on the back of the fact that we are expecting zero growth, and in an environment in the US where that is unlikely to change for a long time to come. And then the argument is what is left within the Fed's arsenal in order to combat the massive headwinds that are facing the United States right now.
Well, it seems that the emerging markets are, of course, in a better space given the fact that we still have some bullets left, and that's in the form of interest rate cuts. We keep talking about what could play out in the country. We've got CPI data set to be released. It could head closer to the target of 6%, which means that if we breach that headline number, then it warrants an interest rate hike. But that's not the case that is playing out on the ground, Brigid.
Exactly, and I think that that's the scenario that we've been presented with. I mean, we've been talking to investors for some time now and just saying, as much as historically South Africa has always been an inflation targeter, and yes, the Reserve Bank is still within that inflation targeting mindset, the bigger picture really is around the growth scenario. And if you look across any other emerging market, any other market in fact that has hiked interest rates into this environment, it's been because it's been coupled with high growth levels and offered opportunity for sustainability. If you look at what's happening in Australia now, even they talking about rate cuts where they were one of the aggressive hikers into the cycle. So, from a South African perspective, I think, yes, our inflation and the inflationary risks still remain because of the fact that there's a large portion of imported prices, the rand's not as strong as it was, etc. But I think overall the big picture is we're at relatively good real interest rates. We have got opportunity that if we really need to, we can cut. And there's those sort of opportunities that are really being priced into the market. Right now, the FRA curve is pricing in a good portion of a percentage of a cut.
Well, let's take a look at the US dollar, Japanese yen breaching of that key 77 handle. How significant is this for you with regards to what could be impacting the local currency and overall the emerging market currency space?
I think it boils down to sentiment. So you're seeing a whole lot of things. You're seeing the gold rally at unbelievably high levels. In fact, we never thought that it would breach the levels that it is currently at for a little bit of time, and that's happened a lot sooner than we thought. So that's a good indicator of how risk-off the market is right now. Then you've got safe haven buying. That is the Japanese yen and the Swiss franc, and they both have stepped up to the plate in terms of trying to combat that. The Swiss government has taken one stance, and the Japanese have stepped in and done actual FX intervention to the tune of almost $60 billion, and we're right back at those levels. So it really just goes to prove that, I mean, you can impose more margins on gold, you can intervene in your currency. Ultimately, the markets at the moment are extremely jittery, completely, trying to offlay any form of deemed risk, and therefore the markets like gold, like the yen, like other underlying sources are doing well, and then you're seeing the offlaying of equities, you're seeing rallying in bonds, and that's going to continue until there is some form of opportunity for growth, which I don't think is going to come about anytime soon.
And also quite evident in the kind of volatility that we've seen. The VIX index,
Correct.
the CBOE volatility index, is actually up around 145% year to date. It's now sprung up above that key 43 level. If we keep seeing this kind of volatility, surely there's also opportunity to be found within the currency space.
I think at the moment, Eleni, I'd advise against that. I'd advise extreme caution in currencies. Unfortunately, what we're seeing is a market that's very, very randomly driven. You know, some data drives the market, some doesn't. A lot of investors offlaying assets are not really sure what the opportunities then remain and whether or not those are, in fact, in this environment, risk-free or not risk-free. So I think, you know, that uncertainty plays certainly negatively into the volatility indicators, as you've indicated with the VIX. And I think going forward, we're going to certainly see continued pressure, and you've seen it on the currencies. I mean, if you look at what's happening in emerging markets, and if you look at what's happening on G3, very, very random, and from that perspective, I would advise a lot of caution. Okay,
so in terms of caution, I suppose one of the most difficult questions for you in terms of ranges for the Rand today and heading into the week, as I mentioned, CPI data, Jackson Hole meeting, also very key on the agenda. What kind of ranges are we looking at?
You know what I think is a big picture, and that's really what I'd like to stick to, is just to say in a bigger picture, I still see Rand as being, for now, slightly stronger rather than weaker. If you think that it's behaved relatively well in regards to other emerging markets and what we're seeing globally, I think that, you know, we've got to see what happens in terms of the appetite for risk and for South Africa going forward. But more importantly, I think for now, for the remainder of this year, I think my call would be that Rand would remain rather stronger than weaker, but next year is where the risk lies, that we potentially could see a blowout in the Rand.
So are we looking at weakness perhaps heading towards 750 or so by the end of the week, and could we actually start seeing a bit of strength as we go forward? You're talking about a much stronger local currency as we head towards the end of the year. You're talking about a Rand below 7.
Well, I think we can look at ranges at the moment of between 680 and 730. Obviously those have been widened because of the extreme volatility and obviously the massive uncertainty in the market. So I think for now that's kind of what you can expect for the next week or so. But we have to see what plays out, whether we do, because a lot of the risk factor will lie around the fact whether or not the Fed decide to impose a round of QE3, what their arsenal is that's left in that, and whether or not that's dollar positive or negative. So I think there is a lot riding on what happens on Friday.